Welcome to day 11 of the 12 Days of Money Tips. Let's talk about investing and why you should be investing now. Investing your money is very important. It's not reserved for the rich. Anybody can do this. And it's not as scary as it seems. So I wanted to break down a few reasons why it's important for you to begin investing now. As you guys know, I do believe personal finance is personal, so I know some people prefer to pay down debt instead of invest. I prefer to do mostly I'm paying off debt, but I do prefer to invest while I am paying off debt because of these reasons. But if you are choosing to wait, or if you're somebody who's just been on the fence about it or just procrastinating on it, then this video is for sure for you, and it is something that you should try to educate yourself on and continue to learn about, because it can be a little bit confusing, but once you understand it and once you get into it, you can just keep practicing and improve from there. It does not need to be complicated. Like I said, you don't need thousands of dollars to begin investing, and I do believe it's something that everybody can start doing little by little. So I do want to break down the reasons for why I think it is you should begin investing ASAP. The first and most important reason for investing now is time. So the best day to invest is today versus tomorrow, and investing at 30 versus 65 is obviously ideal. The reason for this is compounding interest. So when you invest your money, you can expect it to grow. There are times that the market will crash, of course, we see this all the time, but it always goes back up. It's gonna go up and down, it's gonna fluctuate. However, for an example, the S&P 500 has had a rate of return of 9.8 for the last 90 years. So that's a positive 9.8, and that's pretty significant. So what compounding interest is your money is growing, the interest, and then your money plus that interest is gaining interest. So the interest is gaining its own interest as well. And that is very powerful, especially when you allow it time to sit there. The sooner you invest your money and the longer you keep it invested, then the more you allow it to grow. So let me break down the difference of somebody investing from the age of 30 to the age of 60 versus somebody at the age of 50 investing until the age of 60. Obviously, these things are just examples. So there are many things that can affect the investment rate, the rate of return. You know, we have to consider inflation, and there are just many factors to consider, but these are just examples, and there are lots of these examples out on the internet. What I did for this was use a calculator. I can link it down below for those of you to try this and experiment with this on your own. So if a 30-year-old starts at $0 and invests $1,000 a month for 30 years at a return of 7%, which is modest because, as I said, S&P 500 has a return of 9.8. So we'll say 7% just for this example. They will end up with $1.2 million by the age of 60. Now, this is only $1,000 a month, so imagine if they were investing more, or if they started sooner, or if the return was higher. Like I said, there's lots of things to consider here. So 1.2 million by the age of 60, that's really good. Now let's compare that to a 50-year-old. And they also are starting at $0, but they are investing $3,000 a month. So 3 times what the 30-year-old had to do. And they did this $3,000 a month for 10 years until the age of 60 at the same rate of 7%. They end up with $518,000, less than half the amount of the 30-year-old starting at 30. Of course, $500,000 is pretty good. That's not horrible. But if you start earlier, the sooner you start, then the less money you have to put in, and the more it will grow. Reason number 2 for investing right now is to create a promising financial future. Retirement may seem really far away, but time goes really fast, and before you know it, you'll probably be 50 years old, and if you haven't started investing yet, you are going to regret not investing now. I also think that many people still believe investing is something that you do when you're older. I don't know exactly what they think older is, but it for sure should be now. The longer and the more that you invest, then the more secure your financial future will be. Once you have more money and you are more secure in your finances at the age of 60 and beyond, you create less stress in your life. So you will be able to handle things that come up. You will be able to leave your job in case you're not able to work at the age of 75. You should be able to pay for medical expenses. You should have things saved up in different areas. And this is exactly where you'll get to if you start investing for the long term. This is possible on low salaries as well. So once you pay off your debt, or at the same time of paying off your debt, then you can begin investing. And you don't need to invest thousands of dollars each month when you start at 30 years old. So you can, even if you're younger than that, you have more of an advantage. You can start investing at the age you're at now and do what you are able to, work on increasing that. And by the time you hit retirement, you reach the actual age of retirement, you could potentially have $1 million plus saved. The next reason is that you get free money if this is applicable to you. So for myself personally, I do not have a 401k match at my job. I don't even have the option to invest actually. However, a lot of people do, and a lot of people don't take advantage of that. But if your employer offers a match for your investments, whether it be 50% or 100%, then I would take advantage of that. That is literally free money. And if you are putting in, let's say that your company offers a 6% match, 100% of 6% of your salary. So let's say your salary is $60,000. So you would invest 6% of your salary, which is $3,600 each year. And if you break that down, that's not that much each month. And they will also invest $3,600 into that account, that retirement account. Typically your 401k, 403b, just depends on where you work. So you are literally getting $3,600 of free money invested. So that money is also compounding and growing on its own. Your money will grow much faster this way. Now, of course, always do your own research on this, look into the details of everything, make sure you understand the vesting period or anything else that may come with the plan from your employer. But if that is offered, I highly suggest you take advantage of it, even if you are in debt, because that is free money that you would be missing out on. The next reason is that it is pretty easy to do and doesn't require a lot of money to start. Like I said before, investing seems complicated, but once you get started, it's really not so bad. And it's definitely not anything that you need to pay attention to on a daily basis. This is not day trading. Ideally, it's better if you are investing long term, and that is relatively simple. There are lots of resources out there. So again, going back to the last point, if your company offers a retirement plan, and especially one with a match, then I would start there. But outside of that, and if you don't have that option, then there are many options for us too. So you could look into IRAs. There are Roth IRAs, traditional IRAs. You could also invest through a brokerage account. You could invest in real estate. You can invest with mutual funds, or you could invest in individual stocks. Now, I would say that it's best to avoid individual stocks, because with that you are kind of picking and choosing, and that can be complicated, and you are trying to time the market, which is not ideal. You don't really want to try and time the market or figure out which company is going to do best. But if you invest in something like S&P 500 or the total stock market and just leave your money there to grow, you should be good. Depending on how and who you choose to invest with, then you should be able to start with just a few bucks. There are some index funds or mutual funds that require a few $1,000s to get started. For example, I'm invested in VTSAX through Vanguard, and they had a $3,000 minimum. But that doesn't mean other companies have that. There's Fidelity, TD Ameritrade. You can invest with Robinhood. There are many options outside of Vanguard. That is just what I choose to go with, and you can do your own research on what popular companies are and the advantages of each. But seriously, you can just start with a few bucks if you wanted to and get more comfortable with it, and then work on increasing that amount from there. The final thing is that you can't really mess things up. Like I said, if you are trying to time the market and you are doing day trading or picking individual stocks, then yes, you could potentially mess things up and lose a lot of money. But if you're investing long term and going with those known index funds, mutual funds, REITs, ETFs, etc., then you should be okay. Now, you don't want to touch this money. Ideally, you want to invest it long term, as I keep saying, so that money will stay there. And you can expect your money to go up and down, as I said before, and sometimes it will go down a lot and you may get scared and want to pull it out, but do not do that. Just leave it there, let it sit there. It will be fine. It will go up again and you will recover, and then you can add more money, especially when the market is low, and then your money will grow even more. So if you do a little bit of research on the common funds that people invest in, especially related to the FIRE movement, then you should be good. You can't really mess things up when it comes to that. Just make sure you understand the platform that you're using so that you're actually investing the money and it's not just sitting there in the account, and you should be fine. Now, I will say that I am no investing expert. I do invest just a little bit each month, and I do plan on increasing that, especially after I pay off debt, and maybe then I will feel way more comfortable about more specifics when it comes to investment. So please don't ask me detailed investment questions. I just know the basics and what I'm comfortable with as of right now, but I'm definitely not afraid to get started and put more money into that. But for sure, you don't want to look back when you're 50 or 60 years old and regret not investing sooner. But if you do have any questions, especially basic ones, please feel free to leave them down below. If I don't know the answer, I will try my best to get the answer to you, find somebody who can actually answer it. So that is it for today's video. Thank you so much for watching, and I'll see you tomorrow for the final money tip.